Okay, we're glad you've chosen Waltzek.com radio as a trusted source for business, investing, and precious metals information. Today's special guest, David Morgan, the silver investor. Well, it's a pleasure to welcome back to the show the silver investor himself, David Morgan, who pens the Morgan Report and runs silver-investor.com. Welcome back, David Morgan.
Thank you very much, Chris.
All right, after posting 3 consecutive winning weeks, the best month of the year for the precious metals, and the biggest daily gain in over a year, the metals rebound paused last week. We saw some dollar strength. The Fed, the Bank of England, and the ECB all held rates and stimulus measures steady. Any comments here on the pause and whether or not you think the lows are in?
Well, the pause, I think, is probably needed, and obviously there's sort of a war going on, you could call it that, between the supremacy of a paper money system, a fiat currency, or specie money. But more important than that is the low end, and I think the low is in. I put out a update on our alert system. We have a unique system that's actually pops up in front of your screen to let you know that we have an alert or an update if you're a member of our service. And I sent this out on the 28th, or just after the 28th of June, where we had what's called a key reversal. And the key reversal is called that for a reason. And you basically hit a new low, and then you close at a new high. Not a new high, an all-time high, but a high previous. And so when that took place, what it indicates, and it could be in any commodity, is that on a new low, if it's going lower, you're not going to have much buying activity or short covering or both. So you don't know if it's short covering, you don't know if it's new buyers, but you know one thing, the price isn't staying there. In fact, there's so much buying that it's forcing the price higher, higher, and higher, and forcing it so high that it closes above the previous high of the day before. That's what took place. So it's called a key reversal. That's what took place. I looked at it. Since then, we have trended around the 1950 level, as you just opened the segment with, and it's looking pretty strong. Now, is it in or not? We don't know until we know, and I know that's a stupid statement, but it could hit a new low. It could test that area maybe in late August. I'm not sure. I'm fairly certain, however, that the low's in. And what I do know, for all practical purposes, it's in. So if you're going to unless you're like a day trader, buying at these levels, especially for buying the physical market, makes a lot of sense. Gold did not make a key reversal, but it has held near the 1,300 level. I know it's been breached recently, but it seems to be building a base. So there's nothing real scientific about technical analysis. I like it. I think it is a useful tool, regardless of whether or not the market is manipulated. Everything that manipulated or not goes into the data, and you can look at it, and these trend lines do hold. There are certain ways that I trade that are very different than almost anybody you'll watch. Nonetheless, we've been successful, not every. And, of course, as you well know, Chris, I'm well beyond just being a trader, but I'm one of the few that does both long-term buy and hold investing, and I'm able to swing trade, certainly not day trade. I like to do position trading, and the best one we ever did was getting in before the QE2 announcement, and I saw silver break out the 19 level. It went from 19 to 26, and I took the trade off. Right after that, it came up through 26 after QE2 was announced, and I got back on it. The market knows more than any of us, and that's how I trade. The market was telling me it wanted to go higher. It got back on at 26 and rode it all the way up to the $48 high. So certainly, I don't know if I'm going to get a trade that good again in this market. I hopefully will. But nonetheless, if you know how to pay attention, manipulated or not, again, I want to enforce that, you can make money in this market.
So we got about a 100% retracement there in silver. So even if you're not a raging bull, as we both are on silver long term, from a technical perspective here and even a valuation perspective, I can't think of a better time to add physical into your portfolio here. The risk is clearly missing the upside move to 40s and 50s on silver we could see in the next few years. So another interesting aspect we've seen recently, I'm sure you've been watching the futures COT report as well as the backwardation. We had an unusual situation develop about a week or two ago where both silver and gold were backward dated in the exact same contracts throughout 2014. Now, that's mostly rectified itself, but we're still seeing some spot backwardation in both contracts. Any comments?
Yeah, I do pay attention to backwardation, but I do not put a lot of energy into what you just spoke about. A lot of that in the 2014, 15, 16, 18, as far as you want to go, if you're using European options or you're using even American ones, are very small trades. I mean, I went over this thinking perhaps I'd missed something. I mean, I've been in these markets for 40 years. I certainly don't know it all, but I know a great deal, and I'm always learning more. So I called my futures broker and made sure that I wasn't missing something. And basically what happens in those situations normally, I mean, I'm not saying I'm not missing something, but I certainly have ferreted this thing out, is these guys are lazy. I mean, these things are so far out, people don't mark them to market for days or weeks at a time. So it shows on the books as a backwardation. I won't argue a fact. A fact is a fact. But does it have any significance? That's the point. And the point is it does not have nearly the significance that some of my very good friends make about this. So it's been backwardation forever and a day, and then it means this, it means that. No. When backwardation means something, is when the front month of the spot contract that has no limit on it is so far above the next month out that it is wildly exaggerated. As an example, true backwardation that really means something is if you had to pay $30 an ounce for silver right now and the next month out is $18.75. Now, that's backwardation. Now, I'm exaggerating to make a point, but that's the idea. It could be like $22 versus $18.75. That's backwardation. Normally, if that happens, it rectifies itself within a few trading sessions. I've never seen it go for more than about 3. And I said I've been here for 4 decades watching these markets. So that is something that would get me excited, is if you saw gold or silver or platinum, palladium, or any commodity, really, but of course the metals is what I specialize in, where you see that kind of backwardation. This contango spread versus the LIBOR index versus a cup of coffee with a lime squeeze or not really doesn't get my interest that much. People spend, in my view, way too much energy looking at, I think, the minutia here, where it's really not that significant. When you've got real contracts in the futures market and you've got to buy it now because you can't get it anywhere else, and you're willing to pay 5, 10, 15, 20% over the next month out, now you've got my attention.
You know, we've seen over the past year or so short covering by the institutions. So we've got a scenario that generally tends to coincide with market bounces. Any comments on the COT report?
Yeah, several. We do an update for our members on the COT report every week and post it to our members-only part of the website. What we've noticed is that this is the first time in 2 decades where you have seen the shift where we are now, and I'll explain, where you have basically the commercials, or what's known as the insiders or banking interest, as long as they are, with the other side of the trade being the trading funds that are usually wrong about 99% of the time. However, I want to be fair. These trading funds are short from around the $26 level in silver and about the $15.50 level in gold. And they are right now technically or actually at a very good profit in both the metals. However, the important point is that they haven't started covering yet. So it makes me really think deeply. What's going on here? The commercials that are almost always right are basically longer than they've been in 2 decades. That's a long time. Secondly, the people that are holding the bag usually are the trading funds. They're holding the bag maybe. That's a question mark to be determined. And lastly, and most importantly, how is the market going to move to such a level, in other words, from the 1950 in silver to the 26 level, where they start to really lose, not that they haven't shorted below the 26 level, they have. So, Chris, I really think it's a significant change. It's very important, and yet how it's going to unravel, I really can't offer a lot there. I just can see that normally what I know is that the trading funds lose, the commercials win. The commercials are set up expecting the metals to go higher, not lower, and we've already seen a key reversal. So how it unwinds from here, I'm remiss to say that this thing could do a rocket launch, because I really don't want to get people excited. There's another radio show that you're probably well aware of, and and this is my opinion. These guys do a great job, and they, the opinion's free. I mean, come on, we can all have an opinion, and that's great. But they give the impression, in my opinion, that they're always ready for the next rocket launch. But that would surprise, I think, almost everybody right now, because everyone's thinking we're in the summer doldrums, nothing can happen, it's probably going to just go back and forth in August. I just talked to somebody recently that says, it's going to go like this for another 2 years. So there's a lot of sentiment out there, even among the bullish camp. The last thing anyone's expecting, including yours truly, is all of a sudden this thing to ignite and really run.
No, exactly, and that's just about the time when you to see something like that, when even the bulls are lamenting the market action. So good point. Let's move on to gold and silver demand. We've seen red-hot demand worldwide. Gold premiums continue to be high at the Shanghai Exchange relative to London. China appears to be compensating for a lot of the lack of gold imports into India, the second biggest buyer. Many analysts are expecting them to earn the top title pretty soon. What are your thoughts on demand given your key reversal scenario, solid COT, and backwardation?
Well, I think it's the most basic evidence that we have. I mean, I've said a long time ago that we were seeing a huge macro shift between wealth in the West and wealth in the East, meaning that wealth would deteriorate in the West and increase in the East. And really, the harbinger, the king of all kings, is gold. Gold is a great barometer on who's really holding the wealth, and that's moving into China. I've always thought that silver would probably be the Achilles heel of the system. In other words, that silver is scarcer than gold not above ground, or what's been mined, but as far as investment form. There's about 2 billion ounces in investment form. That's bullion bars, such as 1 billion, which is a number you hear all the time. There's only 1 billion ounces of silver. Well, there's 1 billion ounces in commercial bar form, and the other billion ounces is in silver rounds and silver coins, like silver eagles, silver maples, the Luna series from Perth Mint, and that type of thing. So there's 2 billion ounces of investment-grade silver, about 5 in gold. The point being that the shift is continuing, and I think gold is a lot tighter than silver right now. I mean, gold is much more establishment. Banks hold gold. China's been buying gold. And so it's showing up in the gold market. I mean, you've got the German situation. They can get their gold back. Give us 7 years to give it back to you. You have this Ambro Bank out of this Dutch bank that says, we have physical gold. Oh, we don't really have physical gold anymore. You're going to have to settle in cash. So there's all of these really right into your face verifiable facts that show that the gold market is not right. Something's very wrong in the gold market. The COMEX drawdown in gold, which is a pittance of gold. I mean, the amount of gold on the COMEX is ridiculous. Most people know that COMEX is really for thrills and giggles. It's a paper trading vehicle for the most part. Very little physical comes off there, but a lot has. So someone's forcing their hand and saying, it's basically like a card game, and they're saying, show me, don't tell me, show me the gold. So a lot is happening on the gold side, and I think that's probably where it's going to break, Chris. It really looks like it's lining up that way to me.
Mike Maloney, you may have read one of his recent articles. He points out that the COMEX may be close to 10 times the volume or size of the Shanghai, but Shanghai actually delivers 9 times more precious metals than does the COMEX. So which exchange should have the most clout? I think he's kind of making the argument there that the exchange that is taking care of its customers and delivering the bullion. I'd also like your thoughts on what's happening in Russia and China. You talked about them accumulating. Well, there is some speculation that Russia and China actually are accumulating much larger stockpiles and reserves of the precious metals than they are reporting in anticipation of a regional precious metals-backed currency.
Definitely could be the case. I'll borrow Marin Katuska's comment at the Cambridge House show in January. He called Vladimir Putin the next Peter the Great. I think that from the Russian perspective is probably true. This man does not back down. He is a very strong personality, to put it in polite terms. And they, meaning the leaders of both China and Russia, understand the value of gold. Not that the leaders in the West do, but they've already thrown in the towel a long time ago and decided that they could. The Anglo, and I wrote about this in the Morgan Report. It's one of the more interesting pieces I wrote. It was not only the shift that we started your show with, but how this is playing out in the mega elitist sphere. And that is that there's this, in my view, idea that the New World Order or the banking elite, if you will, have got this tight control on everything, and that every move that's made is a chess match and on and on. I said, no, it's not like that at all. What it really is there's two factions. You have the Anglo-American Empire on one side, and you've got the East faction on the other, which is, as you mentioned, could be the BRICS. That's how I named it. You have Brazil, Russia, India, and China, but the big players are Russia and China. And they're not taking much guff from the U.S., really. I mean, you don't know what goes on behind closed doors, but you don't see, when Geithner was Secretary of the Treasury, no longer is, as I know, but when they were having problems, they weren't flying to Washington. They just said, come, and they flew to Beijing, right? I mean, a lot is going on here, and the old adage, he who owns the gold makes the rules, still takes hold. So to answer your question, yes, they're accumulating a great deal more than they're showing in the official records. They do know that it's important, and I think that it's going to shift continually until the reserve currency of the world is no longer the U.S. dollar. And, of course, me and many others have forecast that a long time ago. How it unwinds, we don't know. Hopefully it will be in a manner that doesn't disrupt the markets too much, but it could go the other way. And certainly from history, we know that it could get rather interesting, to put it politely.
I'd also like your comments on this slow motion trend we've seen, not just domestically, but also in Europe and elsewhere, where authorities appear to be making it a bit more difficult to own, buy, and sell the precious metals. Some people have tried to point out that this could take some of gold and silver's luster away as an investment class, but from my vantage point, this should actually be viewed as a big plus for the precious metals, because it appears that the powers that be are starting to recognize that this is maybe the last stand for the individual investor to shield themselves against lost purchasing power as well as confiscation and things of that nature.
Well, it does concern me, but I think it's an individual choice. And I think you have to, at some point, make up your mind as far as where you stand. I mean, if you are going to let the powers that be dictate everything that you do, when you get up in the morning, how often you can go use the restroom and that type of thing. I mean, I'm being a bit facetious to make the point. Then, by all means, stay in their paper paradigm and do whatever they tell you. And they tell you to march off that cliff over there, then please get in line and do it. As far as I'm concerned, there are things that we're standing up for, and the freest thing you can have is free money. And gold and silver have always represented that. Now, I'm not advocating you go in the gray market or the black market, which in most cases is really the free market, but I do think it is a very symbolic and real situation where it's a very good view of what's ahead, and that is that they will try, perhaps, to make it more and more difficult to accumulate or buy real physical metal. That doesn't mean you shouldn't do it. I mean, basically, you got to be true to yourself, true to your family, true to what is real. And if you know for a fact, the one thing that I haven't said in a while is that there's one thing in the financial markets I can guarantee. One thing I can guarantee. Now, you're not allowed in this field to say anything that's guaranteed, but I can guarantee this. Every fiat currency that's ever been tried has failed, 100% of them. The U.S. dollar hasn't failed yet, but the percentages are so high you could almost guarantee that it will fail at some point in time. The question then becomes, is it worth worrying about? Is it going to happen in my lifetime, or is it going to happen 5 lifetimes down the road? I think it's going to happen within my lifetime, but that's the big argument. You have a lot of establishment types that think that it's not worth talking about. It could happen, but it's so far out. It's such a remote idea that you have nothing to be concerned with. I disagree. And as you point out, Chris, look, they're making it more and more difficult. The other side is, and I'll add on to what you asked, is, well, it'll be taxed heavily. All these things are possible. But I ask, what is the alternative? What else is possible? What else are you going to do? And I wouldn't advocate it, but I could suggest that you think it through. I mean, why are gold and silver important? You can look at history. There used to be a joke about, having gold coins to pay off the border guards. There's a reason for those type of things. Think it through, study, do your own homework, do your own due diligence, be true to yourself, but understand there's a price to pay for everything. There's a price to there's a price to pay being in the paper paradigm, and there's also a price to pay by breaking free of it.
But I would then counter by asking, how safe do you feel that those digital numbers in that online bank account, how convinced are you that they don't just get reset tomorrow? or that you don't have a MF Global scenario, a Cyprus-like scenario where everything past a certain level, 100% is confiscated by the state or by creditors. We're seeing a growing and alarming trend of bail-ins seems to be working its way into our legislation. Anything we haven't covered today you'd like to share with the listeners before we wrap up?
No, I'll just point out that, the website's still up and strong. It's silver-investor.com, or you can get to the same website by typing in themorganreport.com. We do offer a lot of free information. You can get on our free email list that's only weekly. I don't like bombing people every day with offers or that type of thing. So once a week we do a summary of most of the shows I've been on, like this one. We have a YouTube channel called Silver Guru, and I have a Twitter feed. The Twitter feed is for those that really want to stay abreast of what's happening in the economic system, and with an emphasis on gold and silver, but I do post things outside of that. So that's for free as well. I do still do a lot of speaking, and I'm starting to get into different venues. I'm speaking at a survival conference in San Diego on the 20th of September, 20th, 21st, and 22nd. Just came back from a Liberty Mastermind in Dallas last month, and that was a very interesting venue, sort of like the Freedom Fest, but on a much smaller scale. And, of course, the resource shows are still up and active, although they've deteriorated quite a bit with the lackluster performance in not only the metals but the underlying mining shares. Nonetheless, as you started with, Chris, and I want to emphasize as I close, there is no alternative to the paper paradigm other than gold and silver. If you had a fence, an imaginary yard somewhere, and you put gold and silver on one side of the fence as a financial or monetary asset, everything else that exists, a stock, a bond, an option, life insurance policy, a prepaid medical plan, anything you care to name, anything is on the other side of the fence. So if you think that everything on one side of the fence is safe, and that's the way to live your life, I suggest you reconsider the fact, because the only thing, if anything goes wrong on that one side of the fence, you've got gold and silver on the other side. It's the only assets that are monetary assets outside the financial paradigm. It's something to consider. You did a better job of it probably than me, spelling it out to people, thinking that, they can't be Cyprus or that their MF Global account is just fine or that type of thing. Think it through, people. It's your money, it's your life, it's your decision, and it's your responsibility.
Well said. David Morgan, we want to thank you, and please return soon. We're going to look forward to seeing that key reversal lead us out of the doldrums in gold and silver.
My pleasure. Thank you.